Hey traders, happy Monday, everybody. Welcome to Charts and Coffee. Great to see everyone. All right. Hope everyone had a good weekend, did something fun. I watched the Formula One race yesterday, a little bit of football. Good opportunity to chill a little bit before we continue into December, which has been really started with a pretty volatile, choppy, kind of week, and it's a good time to take a break, realize that the current environment is not the same environment as we've had in some of the preceding weeks, say middle of October to really the middle of November. Those were pretty nice trending weeks where buying the dip, taking advantage of move higher. It worked a whole lot better than what we've seen since the middle of November to now. And those subtle shifts are so important to recognize, because if we don't recognize that the market has changed its structure, we don't have then the ability to, on our end, change our strategies, or at least maybe scale them back, adjust position size. And for a lot of us, it's even looking at a different set of indicators, looking at indicators that are more ideally oscillators, right? Choppy market indicators that are much more ideally suited to non-trending markets. At the same time, respecting the trend that preceded where we are now. That's 140-year-old Dow theory. And there's a reason why a century plus later, we're still talking about Dow theory. It still works. So whether you're a fan of Dow or Wyckoff, or even Nicholas Darvis discussed market trends. So somebody asked me, is Dow theory as relevant as it was? Maybe not in the sense of transports and industrials. Remember, the composition of the markets were very different. The composition of the Dow was very different back in Dow's day. But the other tenets are still very much, I think, going to reflect what we deal with in the modern markets. So good morning, everybody. Great to see you all. And as always, Charts and Coffee is about your questions. So let's kick it off here. Air conditioned Gypsy, looks like the Asian Open went well. So Sunday's Open, Auckland, Sydney, Hong Kong, Singapore, Tokyo, right? Or I should say Tokyo, Hong Kong, Singapore, and then the London Open. So great observation. We've talked about this in the past with free videos and in the room, where we have to observe how the market behavior changes as the sun rises in the different financial centers. And yeah, no doubt, you'll take a look at 3 a.m. Eastern. It wasn't too bad. I mean, I think things really went probably south shortly after the Asian close. So I think the European and London Opens, my friend, actually we're doing all right. In fact, we punched up to higher highs. I think it's after 4 a.m. Remember, that's when we see the Asian markets wind down. And yeah, the wheels most definitely came off the wagon. I totally agree with you there. So what do I think as far as what we're going to be dealing with here today? So anytime we are looking at the quote unquote pre-market. Now remember, somebody's pre-market is someone else's market. So I think this idea of pre and post is a very funny view, because it's a view from where we sit, specific to our day, specific to our time of the day, right? So the best way to understand, I think, what levels could be in play going forward is look at the volume that's accompanying the highs and lows, or just what preceded, our session, right? And meaning the US session. So I'll be taking a look at the clearing. I'll see how the markets behave between 9:30 and 10, and we'll go from there. And I'll be logged in to the Mastery chat room, the Sector Secrets Mastery, and we'll take a look at what kind of mood this market's in, as well as rebuild our multi-charts, take a look at, if there are some trends, where might we find those opportunities this week? All right, can we cover the Russell? And, the Russell might be one of those corners. So Enduromom, taking a look at what we've got in the Russell. Really interesting break, and it's a little disheartening for someone here who has really I haven't been super active in the Russell, but there have been some excellent pitches. Once we realized this Darvis was going to be great support, thank you, thank you. And then we sort of handed the baton off to the 200. So thank you, thank you, thank you. And then here is the first time we've tested it and not held quite the same way. Although I would say this particular test is the first time we have now got the confirmation of taper. And then now a lot of folks said, is this a taper tantrum? It really isn't. I have to give Jerome Powell and the FOMC chuckleheads credit because they did a very good job projecting what they wanted to do and likely when they wanted to do it. Fed fund futures were able to really reflect that well. But the quicker taper tantrum is what we're dealing with right now. In other words, we're going to taper quicker than we initially communicated we might. We're going to taper quicker than the market's really discounted. And that's where this has been a little bit more challenging. So am I still bullish? Oh, gosh, yes. But this is not the same sort of crisp level that we've been able to take advantage of in the prior, gosh, pretty much all year. So it's tricky, but I'm still mildly bullish. And probably the best thing to say is in some ways we've lost an edge, but the bias that I'll carry with me is definitely to the upside. All right, next up, good morning. Can I show us how to see which ETFs a company is in? Sure. So I like to use ETFDB. I head on over there. I head on over to tools and go to the stock exposure tool. That's it. That's it. Type in your symbol and you'll get the different ETFs that a specific stock is weighted within. All right. Okay, moving on. Got an itch in my eye here this morning. So this is what happens when I pet my cat before charts and coffee. All right. Moving on. Good morning, editor HKT. Can we take a look at XLK? That oh, sure. Right. So kind of related to Michael's question. So if I take a look at XLK, yes, XLK is a conversation about not only Microsoft, but Apple too. In fact, let's do this for giggles. All right, let's put in XLK. Take a look at the holdings. This is not closely guarded Raiders of the Lost Ark information. This is stuff you can find, and then you'll notice, look at the weighting. This is bonkers, and this is the way so much of the markets are designed now. Take a look at that. This is 43, 44%. This is nearly half of the XLK. You think the XLK goes anywhere Apple and Microsoft don't sort of say okay to? So this is what high concentration weighting looks like. All right, back to XLK. As far as more resilient corners of this current environment, oh gosh, XLK would definitely be one of those broader tides that is holding better than most corners of the market. And then Microsoft, a little bit weaker, right? Now, one of the cool things about playing ETFs, one of the cool things about playing sectors and really mastering those is that rather than having a very binary bet on a single stock where you're kind of right or wrong, the nice thing about that, what's the good thing about playing a single stock? When you're right, you can be really right. When you're not right, the neat thing is, and this is the kind of way we thought about it. Think about, well, yesterday was football. So let's say one player on the team is sort of having a rough go of it, right? You've got the other players in the team. You've got your teammates, hopefully helping out. Well, this is where Microsoft is going to lean on its teammates. This is where Microsoft is going to be looked at, not by itself, but what are some of the other stocks in that XLK doing? And sometimes you're going to have sort of this nice cushion, almost a margin of error I would consider even a margin of volatility where you can absorb a little bit more volatility, like a great shock absorber when you play the ETF. You're not going to be so binary in terms of uh, right and wrong. So I like them both. Microsoft will probably move higher with the overall trend and tide of XLK, but I'll probably prefer XLK, editor, as far as pullback buys. Hey there, Tim. Thanks for the futures trading. Oh, the free video Friday. The trouble with trend transitions, helpful for mind and expectations. Oh gosh, my pleasure and my job, as I often say. So if you haven't checked it out, Friday, I wanted to sort of have a video where, when Trish and I are talking about classes and what we're doing with the mastery, we're planning on, what we can do with content and things like that. I'm just going to head on over to the Simpler Trading YouTube, which many of you are on right now. And this one right here, right? The trouble with trend. And by the way, we have all sorts of amazing content, right? That we post every single day. And this video here, the trouble with trend transitions, I almost wanted to call it the trouble with the curve. That what was that, a Clint Eastwood movie or something? Because that's kind of what this feels like, the trouble with the curve. Um, when the market wants to throw, remember when Michael Jordan went to baseball? He actually had a pretty good batting average for a while when he was seeing a lot of fastballs. And then all of a sudden, he started getting changeup after changeup after changeup. And it just kind of went sideways from there. Well, the market throws changeups at us too. And that's kind of where we are right now. We had a lot of fastballs between mid-October and mid-November. So you have to think about your batting average, meaning how you're trading and your P&L and your win rate. You have to think about that sort of in reflection of what kind of pitches is the market throwing at you? Yes, we are the batter, the market is the pitcher. So I think it's really important that people on this side of the mic say, look, sometimes environments are tough. I'm not just going to rah 12 months out of the year. It's not all 12 months are not going to be easy. This type of environment is tricky, and I think for everyone. So if you're kind of feeling frustrated right now, and you're thinking, what the heck happened? I was a genius 4 weeks ago. What happened? My indicators are broken. No, my strategy is no good. No, the market changes behavior, right? We're getting fastballs. Now we're getting a changeup. So I appreciate that, Tim. And if you haven't checked it out, please feel free. I think it'll help a lot. And I think it's, again, important to realize the market's behavior is always changing and we have to just adapt. All right. So next up is December a bearish month? Most likely every year. Isaac, so this gets us wandering a little bit into seasonals, this question. I think that humans have a cognitive bias. We all do. We all do. We have a recency bias. In other words, we think about what's most recent. And then we love to compartmentalize things. So you give a certain time of the year a cute little saying like sell in May and go away, or the Santa rally, or any number of things, the pit bull lows. We love these little things where we can compartmentalize the market and somehow think that we're getting a more easier to identify, almost a set it and forget it type setup. And I wish that was the case. However, some of these things, some of these isms are out there because more often than not, they're true. So I've just pulled up the SPY with a 10-year look back. Take a look there. SPY 10-year look back. Look back matters. It's another way of saying look back is composite. How much data are you factoring in to get your indicator to spit out a reading, or to get a seasonal to give you a cycle or a rhythm, right? So, the look back will matter. The look back will matter. But generally speaking, yes, December is bullish, but I've discussed this in a few free videos, and maybe Isaac, you want to check some of those out back at the Simpler Trading YouTube channel, which is I've noticed that there is sort of three different phases between Halloween and Jan 1, New Year's Day. And the phases basically start with Halloween. It's a nice little move higher to just before Thanksgiving. We get a pullback. We move up higher just before Christmas. We move down lower after Christmas. That's the Santa rally and probably the most intense of the year end window dressing. So, yes, generally it does, but then we have to take out the seasonals, take out that seasonal expectation, say, all right, that sounds great, but what are we seeing now? What are the things this market is having to digest now? And by the way, central bank activity is not set to a calendar in terms of a seasonal. If anyone's playing Grinch right now, we could argue it's Jerome Powell. He's playing Grinch right now with this, or I should say, just the whole FOMC narrative. The Federal Reserve narrative is of a quicker taper. We also can take a look at how the Fed funds futures have now factored in the first rate hike, I think around June of next year. So with that being said, we can look at the seasonal, but then we have to look at what's happening now, and those things can sometimes contrast. So I hope that helps. Let's see. Next up, can we take a look at DGX? Of course. All right. Oops. Be nice if I could type that in right. I will die on my hill of typos. DGX. So take a look at Quest Diagnostics. Let's do what we always do. We start off with what is the structure of the market? My eyes go right down to the bottom of the screen. And if that's the case, I don't have a trend. However, the trend that preceded the chop was up. I can be mildly bullish. I would say you could aggressively play pullbacks. So let's zoom in just a little bit here. Something like November 3.0 and DES 1. That's the window specifically. If we want to look at this as a window of opportunity, that's your window right there. Okay. So we're looking for something along those lines. The calendar seems light until Friday. Well, considering just the bombardment, my gosh, we just got pelted with FOMC, Federal Reserve, just all sorts of stuff last week. It'll be a very nice change. You're right. When I take a look at Monday, oh gosh, pretty light. I mean, very light. Nothing coming out of the US scheduled, right? Again, when we're looking at the hot zones on the calendar, hot zones have to be really primarily two things. One, they have to be scheduled. Otherwise, there's no way we can prepare for them. There's no way we know it's a zone. And the heat, the hot, comes from the expectation that it's going to create more volatility. And that, for me, the reason I call them hot zones and have for about 20 years is because of Forex Factory, really, and a couple other calendars where they'll color code the expected impact of a potential scheduled event. And you can see this is a global calendar. And what Forex Factory does is they paint them red. High heat, hot zone. That's where that came from. So the first one we're going to be dealing with really is going to be on Wednesday with the JOLTS job openings. Going into Thursday, pretty darn quiet. Friday, we get CPI data. Now, CPI data and the jobs numbers, both of those hit the pillars. So we have a pillar of monetary policy. We have a pillar of the money supply. We have a pillar of growth. We have the pillar of inflation. And then we have this sort of skinny fifth pillar of jobs, because this central bank has an extra mandate. This fifth pillar comes from the jobs mandate that's unique to the US central bank. But these four are the primary pillars of macroeconomics. What is the rate of change of monetary policy, money supply, growth, GDP, PCE, CPI, and that's where, call it the fourth pillar if you'd like. CPI is part of that. And then, of course, the Federal Reserve's pet inflation monitor, this PCE. So Friday is going to be a pretty big deal, as will that JOLTS number. It's not a non-farm payroll number, but it's definitely one to keep an eye on. So pretty quiet. Yeah, pretty quiet until we get to Friday. So should be some better, cleaner day trading for us, which will be nice, because one of the things we've been doing in the mastery is reflecting what I like to do, how I like to trade. Morning, I like to day trade. In the afternoon, I like to scan longer time frames, daily time frames specifically. So this should make for a little bit of easier day trading, which in December, oftentimes I'll focus on. And especially in this transitional market, like I talked about earlier, you can check that video out. It's a nice time to shorten the time frame and just not need that longer term follow through, those longer term expectations, that longer term structure. All right. So XLF, Nikolai, I don't mind to keep an eye on it for sure, but you might want to look at some heavily weighted stocks within it to find whether or not they're ready to start to move higher. If not, I'll tell you this, my friend, if you like financials, maybe keep an eye on KRE. But both of those, KRE and XLF, really had a tough week. So maybe be a little bit more patient, because this is no longer a trend at the moment. Okay. AMD, is AMD something to keep an eye on? Rafa, yes. Double green, beautiful. Spot on. Spot on. I love it. Yeah, I would definitely keep an eye on AMD. Question about the euro. Oh, gosh, yes. Short the rip. Short the rip. It's choppy right now, but if we can get a move higher, aka a rip, to about the 21 propulsion, up into that area, right in there, that green dot, that's the propulsion. If we can get a rip up into there, I'd be willing to put on an aggro short. If you don't have propulsion, by the way, that's one of the free tools that we make available out over at countdowntrader.com. So feel free to check that out if you want to grab that. And again, this is double red, right? Gotta love that. This is double red in here. Yeah, we love that, because this means that this is a downtrend. Beautiful, beautiful, good stuff. All right, gang, have a great one. I will see you all tomorrow, same time, same station. Be good to each other. I'll talk with you soon.